and I will be starting, as a result of that, I'll be starting with breakouts. Uh, the reason as to why I am talking about breakouts is because the market is now on a roll. It's in a rally, and that rally is moving into breaking many pivotal points and moving into new pivots. And as a result of that, it's worth looking at how the market or how the prices are moving up. And that is one of the important things that we need to understand at present. As a result of that, I thought of talking about the concept of breakouts and how the prices will be behaving within those breakout points. When it comes to a breakout, in a kind of a normal language, if we describe a breakout, when we are conversing about the market, or let's say, if, for an example, if we are saying let's say Brown's investments, right? We know, okay, what is happening to Brown's investments? If somebody asks, we will say it is moving up, right? And basically we will be talking about how the prices are moving up and so on and so forth. But when it comes to technical analysis, a price moving up is described by breakouts, right? Just because a price is going up, just because the ticker is showing you that the prices are green, we don't believe that the prices are going up. A breakout is essential because of that. If we start, I'm going to use Brown's investments, and also I will be using Expo Lanka to explain about the breakouts and how important the breakouts are going to be. As I said, when the prices are moving up, what does that mean? The prices are moving up from a previous high, right? That is what we call, that's how we describe in technical language that the prices are going up. Just because the price is trying to sort of, gather momentum, we don't believe that the prices are really have gone up. Because in a trend, when it is in an uptrend, it goes in stages. It is not going to go up in one line like this that everybody knows. It's not going to go up like that, right? So you understanding the breakouts will give you another extra tool to your arsenal of investments and trading strategies, right? Every one of you all, in your own right, you all are experts in trading, and you all are taking large positions, right, and taking a huge risk. While doing that, if you know where you are going and at which point this cooling off is happening and why the cooling off is happening, and then moving into the next level, right, it will be very, very useful. Therefore, first of all, for a breakout, there has to be another thing called a resistance when the prices are going up. Then the next thing is that for a breakout, you need to have another aspect called support, right? So when a price is moving up, in breakouts, we say the price has broken out above a previous high, or it can be not only the previous high. There are three components that I can see in when we are describing a breakout. First thing is that it is breaking out from the previous day's high. That is the most shortest term that a price can move up above a certain price. Then we are talking about a breakout above a resistance line or a resistance zone. or otherwise we will be using resistance lines and resistance, or rather, different types of patterns of extensions, right? And we describe them as breakouts above those resistance lines of those respective patterns. So these are the three types of classifications that we have in general when we are talking about breakouts. So the first thing that we need to understand is a breakout from the present situation, present moment, right? We are in the present now. This is the present of Brown's investments. Now, when we are describing Brown's investments, or when we are looking at a chart and talking to ourselves, what we will be talking or explaining to us is about the present high, right? The present high is at 790, and that 790 has to be broken out on closing basis. What does that mean? We have, first of all, in technical analysis, and in general terms, we describe the price in four different terms, right? The price is comprised of four different terms. One is called the open, other is called the close. Opening price for the day, opening price, closing price for the day. Opening price can be for the month, for the week, or for 5 minutes or 1 hour, depending on the time frame that we are looking at. The breakout has to be above the present high. So in the case of Browns, we have, we basically, it is not rocket science for us to understand that, it has to go up above 790 for the prices to go up. But at the same time, we will see now, in this case, right, it went up to 790 and it didn't go beyond that, right? So that is something that we have to understand. Why? Basically, we have to respect that pause in the market. For some reason or the other, the pauses will take place. And in our when we are analyzing the price behavior, we use many tools and indicators to understand where these stoppages are going to happen, where these pauses are going to take place. And those pauses, those price stops are very important when we are looking at an uptrend. The reason why it is important is because of the support base that is going to be formed. When the stock went up to 790, right, now it has paused and we are seeing an accumulation going. A collection is happening, and that collection is important, especially for larger traders who are taking positions in Browns, right? The reason as to why it is important for us to understand how the mechanism or the price action that is taking place within that area is another aspect that we have to understand. And that aspect is to understand where the supports can be, right? So when the prices are moving up, you can see 2 days, there is a pullback of the prices. But just because it is 2 days doesn't mean that it's just 2 candles that we can see here, right? We are talking of hours. We start at 11 o'clock, goes on till 2:30. And you have that amount of hours, right? And then the next thing is not only that 3.5 hours, we have minutes. You can break that into 30 minutes, then it will be doubling that. If you take it and break it to 15 minutes, you will be multiplying based on that breakdown. Then 5 minutes, then 1 minute. Even in that 1 minute, you have 60 seconds, right? So every second counts for us. Therefore, these 2 days of retracement, gives you a larger message, right? It is, as a result of that, accumulation is very important. And when we are talking of the accumulation and as to why it is important is when we are looking at the volumes, because obviously you're paying a price, you're buying shares, right? So you have to look at the volumes, what we are accumulating, and collectively what overall that stock is accumulating. We have to of that. And for the stock to next level, in technicals, we look at the average volume, and the prices have to go, or rather the volumes have to increase above the average volume. Then only the price will go to the next. Until then, you will be looking at in our market. Since 1997, we moved into a different from the trade strategies. We moved into the 8 strategies. Right now, we are talking of technical strategies. Right, if you fusion all these, all of these, you will be able to make use of, you. And you can control strategies the way that planning and your intentions are based on the confidence that you find that counter, right? So I mean, uh, uh, Brown's investments, if you're talking of that stock, it will be the though that crowd which is confident of the counter, which should support it. The rest who are looking at going behind rumors and all that stuff, right? The guys, traders who are believing stock will be the ones who should be collecting at this. In the case of technical analysis, that is what we are, right? And then once that support base is formed, we will be looking at the price clue, right? Looking at that, if we go to the next, before the present stop at 790, if you go back a little bit, you can see at this December, the price went up to 4 rupees and 50 cents, and trace. That is on the 10th of December. When it came down from 390, you can see that there is a cross type of a formation. You can see over there, which is called a doji candle. But at the same time, what is important is not the name of that candle. It may be important for us, but the important thing is that 320 low, right? The previous day's low, when it hit 390, the low was 3 rupees and 50 cents. The next day it came down to 320. The following day, the low was higher than the 320. Now this is called a swing low formation. This is very important for us. The following day told us that the buyers are willing to pay a higher price than waiting for the price to come down to 320, right? During that period of 3.5 hours, the order book and the kind of communication that we have gave us the indication that it is not going to come down to 320, right? When that is happening and that play is moving around during that day, we saw the buyers increasing in confidence to pay a better price than the prices they were paying the previous day. The previous day's range was 320 to 360. That we can see happening. Thereafter, the prices went up, broke out above 390, and went and tested 4 rupees and 50 cents. And that is what is important even now. It paused at 790. We are waiting for that low to form. Presently, 720 is the base. That is the flow, right? We have to see the next days from tomorrow, whether that area is going to be support, that flow is going to be supported. Thereafter, we will see higher lows. Now, incidentally, I'm talking about highs and lows. That is very important, and only in technical analysis that we are so concerned about the highs and so concerned about the lows. And that is for a reason, a very good reason, right? So 720 low is very important for this counter. And the moment we see that 720 is not happening in the future, in the next days to come, then we get another clue that the prices have established a low base. Thereafter, we will see the price move, especially the buying confidence will increase, which will eventually take the prices above 790. And we have tools, and you see the indicator, especially the tools that we have and the wave analysis that we have can help us to gauge where these the prices can go up and find resistance areas, right? So in technical analysis only, we get that opportunity. Then, of course, fundamentals. It's a vast subject, and we get reports from fundamental, research divisions, and they give us targets. They are well and good, no argument about it. But when it comes to price action in the market, you can, if you understand how the prices are behaving the way I'm explaining now, right? You will be able to make use, or you can make maximum use out of the research report, right? The research report, now example about the tile industry or Tokyo Cement or so many other dip products. I saw yesterday or recently there was a research report that has come out giving targets. All that are good. They go into so many areas and cover and come out with a report. That's well and good. But if you know how the prices are behaving, then you can make use of the correct opportunity. And at the same time, if you're confident in taking positions of that, then you will know at which point you can take that position, right? So that this is as far as Browns is concerned, the low at 720 is very important, and the support base, the accumulation stage is very important. Then I'm moving on to Expo Lanka, just to give you the same thing as far as Expo Lanka is concerned. Now, remember I was talking about breakouts per day. That is very important. Why it is important is you can see here after if you go back to this low of October 22nd at 16 rupees, from there it started moving up and broke out above the previous high of 1950, went into 220 rupees, which was a significant price line at that point. Then we went and reached a high of 30 rupees. But at that point, we can see the prices didn't go up above 30 rupees. It came down. And you see, during that period, I mean, it was roughly more than little over a month that it went on a consolidation, on a sideways movement. Quantities or the volumes were absorbed. At that point, there are many patterns that were forming. Bearish patterns, bullish patterns. But if you were looking at the volumes and the price behavior, you wouldn't have got excited, because the price, when a stock is moving to the next level, you don't know where it is going to go up to, because you don't have past data. right? Look at the Expo Lanka monthly chart. Where is the past data, right? After reaching 1620, we are moving into a new world as far as Expo Lanka is concerned. So how are we going to know where this price is going to go up to? Yes, we have, our confidence is there that they will make money, they will show profits, their EPS is going to go up to this level, that level. A lot of theories will come, analysis will come, all that stuff. But there are pauses because people have to unravel themselves. They have to, everybody, just because they are buying doesn't mean that they are going to stay there. And they can be large sellers, they can be small retailers, right? Collectively, retailers can bring in a huge volume. We don't know what is going to happen. But if you know that each and every day is a new day, and if you know that the prices will be behaving on the condition that the previous or Friday's high has to be broken out if we want to see the continuation of the uptrend. If that is not happening, we have to respect it, right? As long as we are confident and there are a collective of people who are accumulating shares at a certain support level or within a support zone, as long as that support zone is respected, the breakout is going to take place and move to the next level. So when the price is falling, we know we can use the tools and give you the support areas. When the price is moving within that support base, we can tell you, not me, the technicals can tell you that the prices are basing a flow with at lower prices, and it is trying to move up, right? So this is in a nutshell, this is what I want to share with you. This is just basic, I didn't want to talk to you all just like me talking to a new client who will be wanting to understand technical analysis. We will be talking about the uptrends, the downtrends, the interpretations, definitions, all those stuff. That is not the important thing right now. You need to look at the yesterday's high. It has to be taken out for the prices to go up. If that is not going to happen, it will come down, and the levels that it can come down to, and the levels that you are consider or you consider to be comfortable in accumulating further, right? Those are the points that I want to make. You can look at those levels, you can look at those support areas, and then the probable resistance areas by using technical analysis. Basically, that is what I want to cover. And as I said, there are many other things that we use, the tools, the indicators, and I don't want to talk too much about them. I want to leave it to my expert friend, Stock Flash. He will take you all through about regarding those aspects. Thank you very much.
Thank you, Salia. I think that was very informative, and lots of things that we didn't know earlier. I think we have managed to learn something looking at these graphs. Most of us are not looking at technicals, especially in a market like this. We're just going by rumors and stories. So it's a good way to learn for the future, to understand more technicals and to value the share properly. So if you look at the markets also, like, our market, we have just gone back to 2012 levels, I think. We had just reached the 2012 levels yesterday on Friday. So technically, if you look at it, we are not moved forward. We have just gone back to the levels only 10 years back. So if you take like a market like Dow Jones, in 2010, 12, I think they were around 8,000. And now they're trading around close to 31,000. So if you say like Dow Jones, they had a bull run for last 10 years, continuously still going on. In our case, I think for the last 10 years, we were just consolidating, and this didn't happen. Our market should have gone up, say 3 years, 4 years, 5 years ago. I think for certain reasons didn't take off. And now it has accumulated everything, and it's like we are just leaving the balloon now. It's just going up now. So there is a lot of room to go in my what I think. We should be in a good bull run for the next 2-3 years, I think. So I think we should be prepared to learn not only by rumors or other earnings only or reading annual reports. I think another area to go in like technicals. It's very important to learn. So from what I hear from them is just basic that they have told us today, and they feel at least another 4 to 5 sessions will be required to understand a little bit much better. So let's see if we can, after this program, we'll chat in the group and see how the interest, whether like people want to go through this. Today I can see about 113 currently are participated. So that's a lot of interest is there. So let's see if the interest is there. We can have like weekly or something like that. We can have few more sessions to go through and understand better. So without taking too much time, I'll hand over to Roshan to continue.
Good morning, everybody. Welcome to the session. First of all, I would like to thank Imtiaz for joining me to this group and everybody for welcoming us. So I'll just quickly go through just some of the basics for the benefit of everybody. Just to explain what is support, I'll just show you. Yeah. Okay. Yeah, sure. Yeah, so this is basically a support we are looking at. Okay, so support is where we get buyers coming in to the play, where the sellers are pushing the price down, the buyers come into play, and the price tends to go up. Okay, and resistance is where the sellers come into play. They come into play and they push the price down. So if you look at this, this is a resistance level. So a certain point becomes a resistance level when it's continuously pushing the price down from that level, not at one point. So if you look at this chart, here's 1 point, 2, 3, 4, and only the fifth instance the price is able to break out. So this level is becoming a resistance level, and this level is becoming a support level. Okay, this is 1, 2, 3, 4. I'm just quickly going through these things because I think most of you all have this knowledge. So just to just put it again, and then we have sort of trends also with this support and resistance. Okay, and we call them channels. If you look at UBC, yeah, here you see how we draw this is. We get a tool here called parallel channel. Just look at the lows. So if you look at the chart properly, you start seeing this, all these trends and lines and channels and all these things. So the most important thing is you look at the chart. You try to read the chart, right? And you draw lines here and there. You practice yourself. Then you get the hang of it. So don't think that you can't do it. Everybody can do this. So you just draw this line and you bring it up here. So now you can see the support is continuously going up. So we call it higher lows, right? So this low is somewhere around 9.9 and the price goes up to the resistance level and you get the sellers coming in, the price is pushed down. And now here the buyers come at 10.7. So there's more interest in this stock. Now the buyers, they are not willing to wait. They are buying in a rush and pushing the price up. So at this level again, selling comes. Now the buying comes at 11.5. So the buying interest is there, right? So at a certain point, this resistance line is broken, as we can see here. So if you are a swing trader or someone, so I used to trade this. I used to buy here, sell here, buy here, sell here. So that's a swing trade. I even sold here. I didn't expect it to, go like this. So, but however it happened. So that's the nature of the stock, because you can see the volume here. The volume is huge. If you look at these areas, So that was the reason for the big price break action here. So we need to consider the volume also when we are looking at price action. And other thing I want to show you, I'm going a little bit fast because these are very basic things. If you here again, I want to show you support and resistance. Okay, if you can just try to figure it out. Can you see a line here? Yeah. So now that is resistance. And if you look at this, you get a support line here. So what is happening here? So there's somebody exiting this most probably, right? So, and there's somebody collecting this. So someone is trying to exit from this at 19 level. Or, there are multiple sellers coming it at 19, but they're only selling it at 19, right? So when the price is going up, you get the seller, it comes down, but it's coming at a higher low. Now this is very important. This is a very bullish trend. If the price action is giving you a higher low each time, that is a uh, bullish characteristics you see in a stock. It's showing an uptrend, a bullish trend. Here again, you see a higher low again a high low, but each time the resistance level is the same. Okay, so now that is basically the resistance and the support. So you need to look at these things and you need to draw lines, right? You draw the lines and you get the hang of it. So I just explained you support, resistance, and I showed you a ascending channel. So likewise, you get descending channels also. So those are mostly bearish. Also, if you take the market, you can see, trends like Salia spoke to you about Expo, about Bill. So those are in uptrend, and then you get downtrending software stocks also, which we don't see at the moment. Most of them are, if you look at RHL, because it was recently only, there was a breakout. See, now this was going in a downtrend, right? And at a certain point, it start consolidating. Now, this is what Sali was talking about, the consolidation. At this channel, it was consolidating all this time. So that means, this lower is not getting broken again. It's been a support now. This support is confirmed, right? And here, if you look at it, what I spoke to you earlier, see, now the support is getting interesting, it's getting higher now. Now it's not even coming down here anymore. People want to buy it here now. So those are very bullish things we need to see. Now when I saw this happening, I was getting very interested in this stock, because now it's no longer going in this channel even. It's buyers are coming here. So it was just only a matter of time, you can see. And the other thing is we want to know is now this was the resistance line for this stock. Now this has to act as a support. Now this has come down a little bit, but I think I haven't drawn it properly. Yeah, it's somewhere here. So as long as RHL maintains above 19, somewhere there, this uptrend will continue. If I show you the Greg chart. So the theory is a resistance lines when broken, it will act as a support line, right? So if you extend this here, can you see that? Once this line, this price action broke up the resistance, it started acting as a support. So whoever takes position here, because some they wait for the breakout to take a position. Some they take the position before the breakout. Seeing the breakout, they take a position. So if you take a position here, when it breakouts, you can be in a bit of a, in a gray area now, seeing this price coming down. But as long as the resistance becoming a support and the price action stays within the support line, there's nothing for you to worry. We can expect it to break out anytime. And then we need to look at the volume all the time, right? So if you look at this chart pattern, this is called an ascending triangle. So I'll just explain you about ascending triangle a little bit. So usually you get an ascending triangle in a bullish trend. That is, the price is going up, and at a certain point you get a consolidation. And the consolidation is happening in a triangle, in an ascending triangle. So this bullish pattern will continue after this triangle formation. So that is called trend continuation. So ascending triangle is a trend continuation pattern, right? So if you look at Greg, we know it was prices coming down, coming up from a certain point. See, it has come up here, and then it had this consolidation going on. It was getting ready for the next push. So like Sali has said, you can see the same thing happening in Bill at the moment. So it's consolidating. So it has to go through, maybe not not like this, maybe, I don't know, maybe another 1 or 2 days maximum. It is going to have some action. So when we talk about patterns in the Colombo Stock Exchange, right, there are patterns that work very, very highly. There are patterns, if you take triangle patterns, that is ascending triangle, symmetrical triangle, descending triangle. To my experience, 90 to 95% of those triangles will give you action. That if it's broken out with volume, it will guarantee you the price action. And then you get some patterns like head and shoulders or cup and handle, flags, pennants. So those things we can apply into the Colombo Stock Exchange, as I have seen. And there are a lot of other patterns which we hardly see any action, is going according to those patterns. So I only, mostly concentrate on those patterns. So this ascending triangle I just told you, and so just remember it is a trend continuation pattern and a bullish pattern. And the characteristic is you get always higher lows, where it shows the buyer's interest in getting into this stock, right? And there is a seller or lot of sellers, they are only willing to sell it at that range. They are also not coming down. They are also waiting there. So that is a very bullish sentiment of that stock. And when the price break happens, how do we target this? How do we give a target? So usually you get this resistance level in and this beginning of this support level. And you take this height and you put it in the breakout. So this is the target, but the time can vary. It can happen in few days, so it can take as same as this length, number of days. But usually when the breakout happens, it usually does not take the same length to reach to the price, because the price is going to behave in a very bullish way. Also, we need to look at volume. There definitely has to be a volume increase. So I think here the volume increase is not there that much. So maybe that was the reason the price has to retrace again. Here we can see some volume action here and even here. Also, another thing we need to notice is the volume is coming down as the triangle is getting expanded. Sorry, the triangle is contracting, the volume is also contracting. It's coming down. That's another thing we need to look at, right? Because just because you see the triangle, it may not work, it not be a valid. So there are few points you need to look at in order to make sure that the triangle is valid. So one is you need to look at these higher lows and this resistance at the same level. You look at the volume in the breakout, the volume has to be more, which is not the case here. If you look at Mel's, I think that was good. And at the same time, when the triangle is getting built up, you need to have less volume. Less volume, and at the breakout point, the volume has to increase. Yeah, here you see the higher volume here at this breakout level. So again, here you see the low is here, 29, and then you get a higher low, 31, and you get another higher low, 33, and ultimately this resistance line is broken. Again, here again, it's a trend continuation pattern. See, the price is coming up and it's consolidating. It's consolidating in ascending triangles. Now, this is what we need to look at. What is happening here? If we identify what's happening here, then we can say exactly, is it going to break up or is it going to break down? So that's what, if we take bill now, that's what we are looking at, how the consolidation is taking place. Is it going to go up or is it going to go down? So ascending triangle, 95% tells you that it's the trend continuation and the price is going to go up. So I think we are almost at time, right? So we can discuss about the other patterns on the next day, looking at some of the other topics. Okay, thank you.
Thank you, Roshan. That was also very interesting to look at from another different angle, how the charts and the technicals to be looked at. So I think now we are getting a much better idea to read technicals going forward. I think lots of charts are put in our groups. So next time when we see one, I think we'll be in a better position to understand. Also, I must tell that for the first time I'm meeting Sali and Roshan. Today only personally we have met. Some of the shares, what are the shares that were discussed were all on their own. They never discussed anything which to tell or anything. There's one or two shares where I'm also there. I must be clear on that. We're not trying to promote any shares, anything here. basically we are trying to get the group members to share our knowledge. So basically what I have done is creating this group more than 2.5 years back. What I learned and what my experience to share with the members. So we are not trying to promote anything or this thing. I brought a lot of new investors also into the market because timing was right. I've been telling them, and some have benefited a lot on that. So the best is for them to do their research. They must be always educated on this one and always look at a long-term basis. Don't just come for the short term when the market is good. Continue studying, and then you can be a much better trader. Another thing is basically I wanted to say about the market. Now last week I had a TV show, on a business show I was interviewed. It was in Tamil, so I'm trying to get a translation done soon, and I'll get it done in another day or two. I'll post that one. But a few areas I think they had missed out due to time constraints or whatever, where I mentioned the reasons for the market to go up. The first thing was the confidence. I think the sentiments had improved after the elections, and the few tools that used, they brought down the interest rates drastically by about 6-7%. I think interest rates had come down. That benefited the companies. Their profitabilities have gone up on that. The people who are investing or going for margin trading, their borrowings have come down. Of course, the people who have put on fixed deposits, their income has come down on that. So there's another reason. People are now transferring money from fixed deposits into the share market now, because the rates have come down to only about 4-5% they get, and they feel they can make better money in the stock market. That's one area. Another area is the taxes. I think immediately they reduced the VAT. VAT was brought down, and thereafter the corporate taxes also was brought down. So that also again benefited the listed companies. Another thing was also now they have also appointed a minister full-time in charge on capital markets. So that's also another positive. You can see always positive tweets have been posted by him time to time, and that's also another good thing. One more thing is, and so many other good things are going to happen, the SEC Act is going to be changed, dematerialization is coming soon. Then there is going to be more listing going to come in the market, a lot of IPOs to come the next 2-3 years. There can be the port city is going to be a huge thing. Then from Hambantota also there is a lot of factories and all to come. There's a lot of FDIs to come, I think, going forward. Although we are still talking about the debt situation, whether we can pay all these. I have put a tweet a long time ago, I think about 3 months back, and I have forecasted and I have predicted very boldly at that time, saying that SPI will go up to 10,000, and we are getting quite close to almost now 8,000 now. And my target was by December. I think looks like the way things are going, it can be in 3-4 months we'll achieve that target. So there are lots of positives in the market. So other thing is the monies that are flowing in, like from the car traders to importers. All these monies, they are because of import restrictions. People are now transferring money into the market. So it is a good thing. People are now learning about the stock market. At one time, it was not that much publicized, or people didn't want to go. They didn't know what was it. But the world over, I think you see most of the people, you take to a small taxi driver, to a security guard, or anyone who is retired and working on that field, have always had some experience, and they have invested in the stock markets. In our country, I think we are not promoted. So some people feel it's just for the up end, just for 1 or 2% of the population only. I don't think so. I think the market, with this kind of a momentum, the government is also now trying to promote. I think people all must come in as stakeholders into this. That encouragement has to be given, rather than publishing in the papers and whenever the market goes up to just to bring down and say all the time talking about pump and dump. So then they scare all the people, and what will happen is still the people who have money will still make money, and the newcomers or the retailers will get scared and they'll move away. So instead of that, I think we should always try to get everyone, and there should be more promotions by the CSC or other groups. Now in our case, like in my case also now, this group what we have started, and I'm also now quite active in Twitter. In all this we are doing in good faith. We are trying to, to promote the market so that more and more people will come and they'll understand and trade better. So that's one of the reasons that I'm trying to share my knowledge. We have gone through like 10 bad years. We have paid the price for this. Our tuition fees is quite huge. So with all that, now people are coming in to make quick money, but don't just look at only quick money at this moment. Yes, you can make now, but always look at a little, keep a certain amount in the stock market for long term. And of course, while you're doing your core business also. That's one message that I want to give. And I want to say Mr. like Nimal Perra and all have been in our group quite active. They've been promoting and to get this technical team also into our group, so that now we are more focused on technicals and other fundamentals. And we are discussing. We never discuss, like if you see in our group, we have more than at least 50 listed company directors in our groups, but we have never put pressure or never asked a single question from them through the group whether this share is good or what is the valuation or what is happening. We don't go for that kind of inside information or anything. We just discussed about a share, and whether expo is good or bill is good or the product is good or whatever, and each one gives their own opinions, and everyone is now quite understanding about the market and shares, and they also give their opinion. So we just discuss only on those areas. Sometimes we might get carried away and trying to say one share will go up to this level or whatever. But again, based on certain earnings, we look at earnings and we say there is a way of calculating. There's earnings per share. If it's 10 times, there is a way. If its P ratio is 10, it should be 100. If the market is going to go up to 20 times, then it's 200. So these are basic theories. So on that only we are just saying this can go, but you all must do your own calculations and understand and trade. So we are not promoting anything individually, just to put you on that. Before we take the question and answer, can I ask like Nimal Pera also if he has something to just to mention, talk something, and then we can go directly to a question and answer session. Maybe Tushan will have to unmute Nimal. Can we do unmute? You can unmute. Huh? Nimal, you are there. Can you like to say something? Is he there? Nimal. Earlier he was there. Because he also have been quite active and trying to. Now we can be always silent. Silently we can make our money. Like now we don't have to share with anyone. We have our knowledge, and with our funds, very quietly we can sit and make our money also. But here we are trying to share with everyone just to give this thing. I think Nimal is the talk also.
Can you hear me?
Unmute.
Can you hear me?
Can.
Yeah, yes, we can.
Yeah, actually, thank you. Yes. Arranging event. I mean, initially asked you to organize these technical analysts to our group. So I suggested one, you brought other two, and now we have full team. And we had to thank Ravin also. He's also contributing to the group, and next time we can get him also online. And he's also a very good contributor, especially Sali and his team. Also, and we should not worry about the Sunday Times articles, because Sunday Times is always against the market. And last 10-15 years, I remember they never support the market. They always write against the market performance, and they are writing all bullshit stories and pump and dump. I mean, they are the one who created this pump and dump and stock market mafia. So you don't need to worry, and we are not doing any pumping or dumping things in the market, and we are always concentrating on our fundamentals. So Previously, we never consulted this technical analyst. Now we are going by their advice also. So we always do our trading on very ethical way. And though we are in a group, we never discuss what share to buy, what share to sell, and what price to buy or sell. And we maintain our integrity and ethics up to the maximum level. And hope this discussion will continue, especially these technical terms. We had to elaborate a bit, Salia, and some technical terms we cannot still understand, and these candles and how these candles form, and so especially retracement, at what level these retracements happen, and support levels and breakouts, and you need to give examples in details, and especially people who are just trying to understand technical charts. So hope we can have more and more programs like this, and if there are any cost involved, Imtiaz, we can share the cost, and hope everyone is enjoying. Thank you very much once again.
Thank you, Nimal. Anyone else wants to ask some questions? Anything about technicals? Or... What was it?
About the breakout.
You can tell me.
Shall I show the candles? Since Mr. Pera asked about the candles and other, sorry, other the meanings, or to be familiar with the terms. First of all, let me just show you what a candle is. Basically, you have different chart styles in the that we can use. Mostly, we use the candlestick chart. Then we use the bar chart. Then also, on and off, we use the line chart. And these are the charts that we normally use. But then frequently we use the candlestick chart. And in the case of the candlestick chart, the candles each candle refer to one period. It can be, and the periods are the time frames. And you can see that there are many time frames. When I explained, our market has 3.5 hours for a day. And then we have weeks where we have months. And also that 3.5 hours is broken into 1 hour, 45 minutes, 30 minutes, 15, 5, and 1 minute, respectively. So all these are very relevant. Therefore, whoever is looking at the time frame, they will be looking at the candlestick in that sense. Meaning, for that period, when we are using one time period, we know that we are talking about a candle for that time period. So in the case of this day, these are the price action within the day. And if we zoom in, I will show these candles. Okay, let me change this to the normal colors that we have. These are the two normal colors that we have. Now, a green is when the open price is lower than the closing price, or in other words, the close has been higher than the open price. That is why it is green. The opposite is true for the red candle, where the open had been higher, close is lower. That's why it's a red candle. But then you have two wicks, or also we call them shadows, up and down of a candle. You can see that this long candle, which is green, right? You have only one wick at the top. Then the next red candle, you have both wicks, or the shadows, one on above, the other one at the bottom. And what those two represents are the other two price points that we monitor. and which is very important for us, the high and the low. The top of the above wick, top of the above shadow is the high point. The low, or the tip of the lower wick will be the low. So in this case, we always go by the price range, and for that we make use of the low price and the high price. For the day, that is the price range. And then within that price range, you have the open and the closing price. That is how a candle is being, structured, and that's about the candle. And then there are many things that can be interpreted by looking at the candles. You can see that one candle, the green candle that I'm just pointing, you have only the top wick, but you don't see the wick at the bottom. That is because the low and the open had been the same. See, if you can just relate a story, or you can describe the candle itself. This candle open at 68 rupees with a low at the same at 68 rupees. Then it moves up to 80 rupees. Then it finally closes at 76 rupees. So when you keep on reading each and every candle, right, you will understand how the prices are moving also, along with the volume behavior. So that's about the candle and how to read the candle. And you have candlestick patterns, and these two candles that I'm showing, it is called a harami, and there are so many kind of tongue twisting words we use in these candles, explaining them. So that's why we are saying we need separate sessions, even for, when you are talking about basic, it's not only the trends, then the what you call the support and resistance areas, right? For each and every subject area, you have the basics. So that's why, at least if we can get ourselves interested in looking at the important areas, then it will be much better. Because if you take the indicators, look at the indicators, there are hundreds of indicators, and all of these are very important, and they have their own structure, their own stories. Then you have this, on the left panel, you have many tools that we are using. So for that also, it's kind of, it's in a one shot, it's very difficult to kind of gather everything. We can talk for, until cows come home, we can talk, but you have to get that across into your mindset. So that's why.
Thank you, Sally. This first thing I need to thank Mr. Tushan also for accommodating us and giving this Zoom with over 100. I think I said about 1,000 he can accommodate. Thank you, Tushan. And I like also, if you can, Tushan also can talk about the market and give us a little input. It might be better.
Yeah, thank you, Imtiaz. Actually, you're doing what stockbrokers should be doing, and we really appreciate you being a high net worth individual client.
Tushan, are you there?
Yes, can you hear me?
It's talking.
Can you hear me?
Yeah, can hear you.
Right. So thank you so much, Imtiaz. Very briefly, for our market to go up, firstly, there were a few things which behind the scene we had to get corrected. One is that the 1 year treasury bill rate, which was 11.8%, had to be brought below 5%, and that this government is confident of maintaining. Then secondly, there had to be a ministry, capital markets ministry created, and a good spokesman, Nivad Cabral, had to be appointed, so that whenever there is a misinformation, he puts it right and he talks in the proper forums, local and foreign, and brings investments. Thirdly, the exchange rate has to be kept around 185, where Dr. P.B. Jayasundar is confident. However, I'm skeptical because there is 680 billion worth of uh, rupees has been printed. So little by little, the rupee may slip at some point of time when imports have to be opened. So at the moment, looking at all these things, so the imported restricted tile companies, manufacturing companies should be okay. Then companies with dollar-based assets should be good. Then companies like Expo, which has dollar-based income, would be always okay. Then for the banking sector, there is a lot of misinformation. As you know, you will be buying today, we'll say 100 million worth of banking stocks. But what happens is you'll find the same market value much later also. The reason being from 1st of April, all SMEs have to pay 2 installments, and majority won't be able to do that for 12 months. Then also when you borrow, what I suggest is you all investors, best is to borrow now and get rupees now, because if when you have to pay it in 3 years or 10 years, you'll be paying very much lesser, because the value of the rupee will be very much lesser. And however, the assets you have bought, that is shares with high NAV in fixed assets or dollar-based assets, those will be very much more valuable. So far as the market is concerned, the interest rates will be low for at least a few months. So the market is going to be good, but select very carefully proper stocks using fundamental analysis, and put it into your basket. For timing, use technical analysis, and then go into the proper shares at the proper time. You need to do this carefully, and we must not mess up this good carnival we have. As you know, carnivals sometimes end up with fights. We must protect what we have. Don't take the market too fast. Markets have to go corresponding to the NAV increase of companies. You can't have share prices shooting up and NAV increases going at a slower rate. Both have to parallelly go. So we must not push up markets too fast. And also we must raise against any people politically, with political reasons, trying to put down the market. Right. Thank you, Imtiaz.
Thank you, Tushan. That was very useful from your side for the market. Anyone else wants to ask any questions? Or you can type the question there on the chat. There's one. One answer.
Yeah, somebody had asked regarding the RSI. It's asked, is it true that only RSI indicator is good in CSC? I think that's not. It's very incorrect. So RSI is not a. It's a very lagging indicator. Okay, we don't take RSI like a. It's. I won't call it a good indicator at all, because it's a lagging indicator. And if you take, there are other indicators like MACD, like as you have mentioned. So if you take MACD, that's also a lagging indicator, right? So if you know how to read a chart, okay, if you know how to look at a chart and read the candles and read the price action, you actually don't have to look at these indicators. So that's where you should go to. Now, when I read a chart, I hardly look at these indicators, because I am only looking at the price action, right? So if you look at RSI, now the RSI is very high if you take in some stocks, but that doesn't mean the stock is going to come down. So that's how many people interpret this RSI. They say, okay, it's over 80 now. Okay, I have to sell now. It's overboard. It's overboard. It's hot. All that, but that is very, very wrong. RSI can stay above 80 for months, many, many months to come. So it's only, just giving you an indication that the interest, we can take it at that way also. The interest of a particular stock is very high. That's why, the RSI is going up. You don't buy a stock when the RSI is below 30. It's not a buy signal. Just because the RSI is low, you don't buy it, right? Because it's not trending. So the RSI above 50, you say it's trending, it's in the buy zone or it's in the bullish zone. But just because it go over 80, don't ever sell your stock. Don't ever think it's overbought. Don't ever think it's too hot. Okay, just hold on, and you have to wait for the timing. Okay, you have to watch the charts, you have to watch the market, you have to watch other things, and then take a decision. Don't take decisions only looking at RSI or only looking at other indicators. Okay, yeah, that's it.
Okay, I'll take on the support, the question on the support and support breakout below support, which can be, which is known as a breakdown or a breakout below the support. Now, first of all, we have to identify what the support is, right? If you take Sinon Investments, right now I consider the present support to be at this swing low, which is at 70 rupees. So that's the support. If what will happen if the price falls below 70 rupees, right? This is the 70. And let's, sorry, how much is it? 76. 70.60. It's a support. Right. If this is going to, if the prices are going to break down below this level, then we have to look at to the next level. And there are two levels that we will be looking at. Remember, Roshan mentioned that a support can be a resistance line. A resistance line, when the price breaks out above the resistance line, becomes the support. Now, in the case of the support line, when it becomes, if the prices are coming down below the support line, it becomes the resistance line. And then we look at the previous resistance lines as well, because that resistance now becomes the support. You can see that the 70.60, if you stretch this line further, you can see that once it had been a resistance area where there had been sellers. So remember, when you are talking of support and resistance, it's all also to do with demand and supply. I have there are certain technical analysts who are using, instead of support and resistance, those words, they are using the terms the demand and supply, which is very very, very comfortable and well known to us. So you can see that the support is here. Then the next level of support, if the prices are going to come down, will be the previous support before that resistance breakout took place. And the previous support is here. that is at 65 rupees. Now, let's say the prices are going to fall down below that. Then we will see this area. While we are seeing all these things, we are using the trend lines also as our support or resistance lines. Support line, by using the trend lines, will be by connecting a minimum of 2 low points. And that is what I have done here. There are several, I have connected the low of this to the low of this, and this is a support line. So basically, even if the price fall below the 70.60, the trend line, which is acting as a support, can be a support area. So if that support is not going to function or become a strong support, then we will be looking at this area. So by the time it falls to that level, what will happen is that the prices will start coming down below this level. That is very bearish. If it falls further down, right up to like this area, meaning this level, it is bearish for the present trend. The reason why we are saying it's bearish for the present trend is because the trend is intact still. In a trend, little while ago also we were mentioning that a trend is when the lows are higher. We have in an uptrend higher lows and higher highs. So even if it comes down to this level, you can see we can all use these major points and draw a line here, right? So basically, from the start of this rally, the trend line which is indicating the uptrend is by connecting the earliest 2 lows, right? So that is what I have drawn here. So if it falls below that, then unfortunately this trend is falling. There is a reversal. So before this reversal takes place, as Roshan mentioned, we need to look at the chart. Chart means the price and the volume, right? No point looking at the RSI. Even without looking at the RSI or any of these tools are derived by using the prices, and certain indicators are using the price plus the volume. But most of these indicators are using formulas derived by the prices. So therefore, before any of these indicators, the price, why the price is important is price is what we are paying, or price is what we are selling at, and the volume, that is what we are buying. You talk to a broker and you are not going to ask to buy the RSI or the moving average. You will be asking to buy this share, this price and this volume, right? So that is why the price is important and the volume is important. If the prices are falling like this, then we need to understand that there is something wrong, and we have to understand our risk profile and get out. So basically, when you're talking about risk profile in terms of a 100% situation, if you lose 5%, you need to make 5% to go back to that 100%. But if you have lost 50%, so in order to make it 50, then you have to go up to you have to make 50. So 50 out of 50 is 1 out of 100%, right? So you wait until the prices fall below 50%, then there is, so your risk management is not sound enough. So that's why all these supports are important for you to understand at what price you have to exit. But in the case of an investor who is confident of this stock, right, who believes in this stock, then it will be a different ball game. The support area will be very important for them, because at that point, when the prices are moving down to the support area, that means the prices are coming towards you. You're not going behind the price. So there are two ways that you can look at it, right? So the support is an important area for the investors who are believing in the stock, but for traders who are risk managing based on their risk reward ratio, they have to think very fast. That's about the support. Thank you.
Thank you, Salia. We'll close by 12:45, another 7-8 minutes. Just one or two questions can I ask? Like, let's say in the market is moving, say, 200-300 points in a day. During that period, is the technicals, is it still relevant on those days? One. And number two, on through technicals, can you give a target price? Does it show a target price? What's the value of a share or something that I don't know? Just can you explain those two, please?
I'll take one of the
Sorry.
So, okay. I'm sorry. I was muted, but sometimes I don't know with the others from the other speakers. You heard?
No.
Sorry. Okay. My what I was saying is that LOLC adjusted all high was 210, and yes, on Friday we broke that 210, and we moved into new highs. Now we are trending in historical highs. Answering to Mr. Buhardeen's question, whether we can make use of technical analysis to look at areas where it can go up or come down to. There is a theory called Elliott wave theory, but even for that theory, we are counting waves there. But where it is going to go up to in terms of the resistance areas, even for Elliott wave theory, we have rules and guidelines which says based on certain Fibonacci numbers, the next wave can be at this level. So Fibonacci numbers are very important. And what they are doing is they are using Fibonacci tools that are available in the software, and these are the tools that you have in the Fibonacci, or rather in the software. Mainly we use the Fibonacci retracements and Fibonacci extension. So Fibonacci, using the Fibonacci tools itself, you don't need to understand too much about the wave counting or the waves and so on and so forth. But talking of looking at the future, we need to understand, or we have to treat the price action or the price behavior based on waves or swings, right? So when we are looking at a wave, we have 2 points. One is the low, meaning the lowest low of that wave, and the highest high of that wave. Now, right, LOLC is at the moment is having a progressive wave. Therefore, we can't take the present high to do an analysis. Therefore, roughly we can say, now we can make use of the Fibonacci lines, and one way of using the Fibonacci lines is by using the Fibonacci retracement lines. And in the case of Fibonacci retracement lines, you have to spot visible lows and visible highs the way you want to analyze, right? So you spot those 2 points. Now, for an example, I'm using the May low, which is at 90 rupees, and this high, which is at 169 rupees. And I'm going to use the settings and do some fine tuning here. Then I will take out the background, leaving only the lines there, and I would want to take the further higher numbers. Yeah. What I did was, when I'm using these 2 lines, and what I did immediately was I was using this wave to see the future, right? This wave I used from this point to this point, I used to see the future and what is going to happen after that. Why I used, I waited until that breakout failure to take place. This high, the prices didn't go up above this high, which is at 167.50. It failed. So that as a result, I took that high, and I used the lowest low in order to use this wave to understand what is going to happen into the future. Now, until I see that there is a trend reversal above 50% Fibonacci line, I will be watching what is going to happen to the counter by using the same default Fibonacci lines. Now we can see that the prices are coming down, and these are the Fibonacci areas: 38.2%, 23.6%, then you have 50%, 61.8. I'm using the 61.8 to 38.2% Fibonacci areas to find the support. You can see the 61.8% Fibonacci line was supported, right? And then there was a breakout. Finally, we can see that it is moving above 50% with higher low formations. Therefore, this the retracement I consider as over, because now we can see that the prices are moving up. So it's a high low formation. The buyers have started paying premiums to that. At that point, I'm reversing this to the other side. And by looking at it, I know now when this retracement took place, or rather the reversal took place, that was somewhere here, right? Somewhere around this period. So all this was nil. We don't know. This is all was not in existence, right? So, but we can see that there are areas where it can go up to from 50%, from 50 to 38%, and that was 50% was 129.50. So the prices broke out above that. Then it went up 138.80. The prices broke out above that. Then we know, okay, it can go up to 152, then 169, then 190, then 201, then 270. Then it's moving up, right? these are the resistance areas based on this wave only. And in Fibonacci, the technical analysts who are using the Fibonacci's alone will be connecting many 2 points to find out, meaning areas where these lines are going to come and meet each other or clash with each other, and they are known as clusters. One example is if by keeping this wave and these lines, I can make use of the wave here. I can make use of the wave connecting from this low to this high, and go and do another Fibonacci line. You can see when I'm doing that, this area is almost, merging with each other. This area is like that. Around this area, there is these two are, forming a zone. So by using many Fibonacci retracement lines, we can see the clashes, which are known as confluence, confluence areas, and those can be used as resistance areas, and they in turn become targets. So mostly we will be using the Fibonacci lines, apart from projections, like Roshan showed in the projection of ascending triangles. You can make use of the Fibonacci lines, and also Fibonacci extension is another tool that we are using. In the case of Fibonacci tools, Fibonacci extensions, we are using 3 waves. We are using 3 waves, 1, then 2, then 3. If you are expecting the prices to go up, then we will be wanting to use 2 lows. The last low is higher than the previous low. So that is here. This low is higher than the previous low, and this. And we will be using these 3 points to project this wave by using the Fibonacci extension lines. We will be taking this line. Sorry. This is the thing. So basically, I think we have to stop here. It takes, that's why there are, to put it finally, you can spot the resistance, meaning higher prices and the lower prices by using the tools.
Thank you very much, Salia. That was very informative. I also learned something from this session. I hope it's very technical. It's not easy to understand in the first session itself. So maybe we might have to meet 3-4 times again to understand a little better. So I, of course, understood a bit. So let's see if we can go forward with this. I'd like to thank Salia and Roshan for coming all the way and doing this session together. And Mr. Tushan also for allowing the Zoom session for everyone to enjoy. So hope everyone understood and learned something from this session. It's very encouraging to see we had over 100 people.